Well, that would be me.
That's you.
The IRS Solution Attorney, Darrin T. Mish.
All right, so this is the IRS Solution Attorney Show.
It
Glad
is.
you're here.
And the topic of the show is not tractors or sinkholes or donations. The topic of today's show is, what do you do when the IRS files your tax returns for you?
Oh, boy.
Well, it's actually a common misconception, especially among lower income people, that the IRS will prepare your return for you and that that's a good thing.
Well, they'll only prepare it if you owe money, right? Is that when they prepare it?
Well, and there are like clinics and things like that where volunteers will prepare tax returns for clients or for taxpayers. That's not what we're talking about here. What we're talking about here is a situation where, let's say you get a 1099 at the end of the year and you haven't been taken care of filing your returns and stuff. And the IRS will eventually go ahead and file those for you. And they don't give you any deductions. They just go ahead and take your gross income and multiply it by, your tax rate, and it ends up with being a big fat number. Is
there a threshold in which they actually file those returns for you? Because, they're getting the 1099, but is there a threshold or a time in which they're like, oh, we're not going to mess with this one. Yeah, we'll go ahead and file this one.
I think there is, because I've never seen an SFR, which is called a substitute for return. That's what we're talking about here, is when the IRS prepares a return for you, it's called a substitute for return, or an SFR. When the IRS prepares that for you, I've never seen a refund generated, and I've never seen a small number generated either. And so
apparently the answer to that question is yes.
Yeah, there's some threshold. I just don't know what it is. I've never seen one under about, probably, I never thought about this question, probably $10,000.
Okay.
Something like that. Never seen that before.
But 10,000 is kind of that magic number, isn't it? Isn't that that magic number where stuff happens?
Well, not necessarily, but, it's one of those situations where it does cost the IRS some money to prepare the substitute for return. There's some procedural requirements they have to go through ahead of time, where they have to give the taxpayer an opportunity to, complain and prevent it from happening. And so
they have to give them notice?
Yeah, they have to send them something called a statutory notice of deficiency, which gives them the right to go to tax court. And then they have 90 days from the date of that notice to go ahead and complain about it and change the situation.
And then they file after that.
Years back, that's been the requirement forever and ever. And years back, the IRS didn't used to do that. They just went ahead and did the shotgun approach on the substitute for returns and filed them for the taxpayers, and that was not a good thing. So we were able to undo some because the IRS couldn't prove that they had sent a statutory notice of deficiency to the taxpayer.
So how many times do your clients actually have tax returns prepared for them? These are people that always owe substantial amounts.
Oh, I would say we see substitute for returns 40-50% of the time. It's really quite common. It's also quite common for clients to come in and say, I just got levied. I just had my bank account levied, or I just had my paycheck levied, and I have no idea what's going on. The IRS says I owe $100,000. How can that be? I've never filed a tax return. And it's that
they filed them for you.
And it's that last.
Right away, right? What just happened?
It's that last sentence, or I haven't filed a tax return in forever. It's that last sentence that I go, oh well.
That's what happened.
Let me explain. They went ahead and took care of that for you. And isn't that nice?
Not exactly, because we're not putting any deductions.
So a lot of times people come in that are non-filers and they want to know, well, I haven't filed in a long time, 10, 20 years, which sounds crazy if you're not in my world, but that's fairly common. And that they want to know, do I have to file the last, 20 years? And that's really daunting to folks. Think about how, you always say it's not that big a deal for you to file your returns because you have a bookkeeper and you have that kind of system going on.
If I didn't, I probably would be late for real.
Yeah, and so imagine, and every small business owner has a little bit of dread, when it comes to time to file the tax return. There's a little bit. But can you imagine 20 years of no bookkeeping, no bank statements, nothing to do, that kind of thing? I
told you, I had a customer that was actually a wage earner, like a W-2 wage earner, and it came from her late husband. Many, many years ago, late husband, and just was so scared she never filed tax returns for that whole time. And, doing the show with you, I'm like, she's going to be okay. Like, there's a statute of limitations. She should be, there's refunds, like a lot of them.
And missing. And there's pretty good clue that since they never did anything, they never did a substitute for return, either she owed hardly anything or nothing.
But
so they won't do it. They will not do a substitute for return for you if you have a refund coming, because they don't want to give you the refund.
And if they file the return, they got to send the refund.
They got to file if they file the return, they got to send you the refund. So
interesting how Big Brother works, isn't it?
Yeah. Big Brother wants your cash. That's for sure.
All right. Well, you're listening to the IRS Solution Attorney Show. You can get us here. We are live at 888-404-1010. Pat George back there trying very hard to make us laugh. 888-404-1010. We'll be back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the tractor driving IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, non-tractor driving co-host, Katrina Madewell. Welcome to the show. And if you want a little bit of Facebook fun, pop on over and find me or Darrin, and you can see a picture of Pat George that I just posted on the break. We're trying really hard not to laugh, but...
So in the last break, if I particularly sounded distracted, it was because our producer today we're talking about what do you do when the IRS files a tax return for you? And in the last segment, we were talking about how if you don't get around to filing a tax return, if you're going to owe a significant balance, don't worry, never fear. The IRS will go ahead and file that return for you. It's called a substitute for a return.
Never fear, the IRS is here. They'll make sure you
They
get
will go ahead and try to assess the tax against you and start to collect the money. But the question that we posed was, people come in to talk to me quite often and they haven't filed for 10 or 20 years and they want to know, do I have to go back and file all those missing tax returns? And the answer is no, because of there's a section of Internal Revenue Manual 4.12.1. So it's the Internal Revenue Manual is like the IRS Bible. Okay.
Can you imagine how fun that would be? Like if there was no deadline, because the tax code changes all the time. So if someone didn't file in 20, 25 years, they'd have to literally go back and look up the tax code at that time, right? To make sure, that would be no wonder.
Yeah. And that's why how long has tax preparation software been out, for 20, 30 years? Because the rules change every single year. And so it's a little bit easier with the tax software than it is, with a pencil, for example. But anyway,
they even take returns like that anymore? I don't think they do.
Yeah, they do. You can still paper file. It's frowned upon. It's
like written, handwritten.
Yeah, and actually, tax professionals cannot file paper returns anymore. They're mandated to file e-returns.
Thank goodness.
Or e-filed returns. And if you file too many paper returns as a tax professional, you're going to eventually have a problem. But who knows how many too many is, right?
So that magic number
but getting to the magic number of how many missing tax returns, Internal Revenue Manual section 4.12.1 says 6 years. So you only have to go back 6 years. We talk about that on the show all the time. So that's really a bonus for folks. They haven't filed 10, 15, 20 years. A lot of times people think that they have to file all those missing returns, but they don't. They only have to file the last 6 years. Part of that is the criminal statute of limitations for the crime of failure to file a tax return is 6 years. So the IRS has that, official written policy. They're only going to ask for 6 years. Interestingly, recently, I had a revenue officer who was insisting that his policy was 7 years. And
they just want to make it up as they go.
And I kind of chuckled. I'm like, well, that's great that you have a policy, but that's not.
Did you check out the code and highlight it for him and send it back?
I did. I had to. He's like, well, you're going to have to show me. I'm thinking to myself, am I the training officer now? Like, what's the deal? So anyway, I did show him, and he and I agreed that only 6 years were required, but that he was going to go back, and his internal policy for everyone else was going to be 7 years. Fascinating. I think that's against the law too, but I can't stop them. I love it when
people make up the rules as they go. Had that happen in a contract yesterday. I literally had to pull out some pages, highlight it, and send it back to the agent.
Well, So what do you do if the IRS actually prepares a substitute for a return for you? Well, like many things in the law, there's lots of answers to that. And the real answer is, well, it depends.
Wouldn't the better answer be to evaluate exactly what you have going on and when? So that you determine maybe when you need to file? Because I imagine there's times that someone comes to your office, you might say, it might not behoove you to file right now. We're going to wait just a little bit until this one falls off.
I'll give you an example. That's a really good example that I hadn't even contemplated discussing. As you recall, there's a 10-year statute of limitations. If the statute of limitations is going to expire in 6 months or 8 months or something, like, why would you do anything other than just wait? Okay?
That's if they have a bill from 10 years ago.
Yeah, if there's been 9.5 years and you know this and you can verify this through transcripts and whatnot, and you can tell when the statute of limitations is going to expire, then you would do nothing, okay? I'll tell you another time when you might do nothing. And then you just file
for that release of lien, right?
Yeah, then you just wait for it to expire, and then you request the release of the lien, and it's all good. I just had a case like that. I might have talked about it in the last few weeks. In the last few weeks, the lady owed $374,000, I think, and she came in and she was telling me the story, and I was listening intently, of course, and I was like, I think the statute's getting pretty close. Turned out the statutes were about 8 months, and the answer was, let's just hold on.
The likelihood of them doing anything, if it's gone that far and nothing's happened, 8 more months is pretty good, right?
Exactly. And she was already, in that particular case, the IRS had already placed her case into what's called hardship status, or currently not collectible. And so we knew for sure
They're not going to
nothing was going to happen, because that had just happened in maybe 3-4 months prior. So we knew for sure all we had to do is wait. So that would be one instance where if they filed a return for you, you do nothing. There's another instance where you might want to do not nothing, but you might not want to file an original return. Let me go ahead and back up and say what the general rule would be. If the IRS prepares a return for you, let's say in the substitute for a return, and it reflects a balance of $100,000, and you think that that's too much because it's not accurate, and it won't be accurate. Everybody in the system knows it's not accurate. It's a fairy tale. But the general rule would be that you can go through a process called audit reconsideration, which is really just the act of filing a new, good, original, accurate tax return. And 9 times out of 10, the IRS will go ahead and accept your version of the tax return and abate all that excess tax, penalty, and interest. So I can't tell you.
Abate means to wipe out.
Yeah, abate means to eliminate. So it might be a good idea to file an original return. It might not. Let me give you an example when it might not be a good idea. If you have several substitute for returns, let's say you have 5 or 10 years of substitute for returns, and you owe $200,000. And you kind of think about it and you're like, okay, gee, if I filed original returns, I can knock that down to $100,000. Well, most people would say, well, that's a good idea. Why don't you do that? My philosophy is a little bit different. My philosophy is, okay, you owe $200,000 as it stands now. And if we spend money to prepare returns and in time and effort, and we get it down to $100,000, are you going to write a check? The answer is always no. The answer is almost always no.
Well, doesn't it move that date up too?
No, it doesn't change the statute of limitations at all. That's well settled now. But again, if you owed 200, you file original returns, now you owe 100, are you going to write a check and take care of it? Half of 1% will say, yeah, I have the money. I'll take care of it. But the rest of the people are like, well, no, $100,000 is still too much money. And that would be when I would say, well, why don't we go ahead and try and offer and compromise now on the $200,000, because it doesn't really matter at this point if you owe 200 or 100, it's still too much for you to pay.
Because they can get into a payment plan.
Does that make sense? Not a payment plan. You might be able to just wipe it out for $500 or $1,000 or $10,000
but
or
it'll
whatever.
buy them some time. A little bit.
Well, usually the offer is going to take a year or so, but that's really not the point either. The point is that if we're going to resolve the tax problem with an offer and compromise, it doesn't matter if the number's big or small. Actually, it's a little bit easier if the number's bigger for some reasons that are kind of hard to explain on the radio. But so that's how my philosophy is a little bit different than people that don't do this all day, because your typical tax preparer is almost always going to take the approach of, we need to get that number down as low as possible.
Right, because that's how they're trained to think.
That's how they're trained, and they're real black and white. They're real math oriented. And I'm less math oriented and more procedural oriented. Like, I just know the rules really, really well, and I know how to take advantage of how there's sometimes some wiggle room in the rules that you can take advantage of legally.
So what I don't understand is how, like, if you're going in and the IRS has filed these substitute for returns and you're pulling transcripts to kind of see what's going on, see if it's in hardship status, all that kind of stuff, how does it not trigger some action? They're not big enough to do that.
So the question is, how is it that the IRS doesn't notice when I get a power of attorney and I go ahead and pull the transcripts? They just don't have the manpower. I mean, they're struggling right now with their basic mission. Collections are actually seemingly falling off because they don't have the budget to do what they're supposed to be doing. And when you introduce new laws like, making them enforce the Obamacare health insurance mandate, and also
it's one more thing they have to do.
Yeah, it's one more thing they have to do. They didn't get any extra money for that. And also, they're going to start.
It irritates them. Like, we have to work more and we're not getting paid anymore.
I know for a fact that it's irritating them, because I get to talk to them about it, and you can tell they're not very happy with the situation. There was another mandate that we haven't talked about much on the show because it hasn't been happening at all, is they're going to start revoking passports for people who owe more than $50,000. That's coming.
Talk about that. Like, what's the timeline on that one?
It is definitely, it's now. It's going to start happening right now.
You know what? We should partner up with like an immigrations attorney and invite them in the show so we can start chatting about that, especially when they start seeing it.
Yeah. Yeah, I need to reach out to some immigration guys too, so that we can team up, because there's going to be some people who have green cards or whatever, and they're not going to be able to travel, and they're going to end up overseas and not be able to come home, or it's going to be complicated. So Yeah,
That's going to be
good.
interesting. We're going to have to get a few stories lined up and talk about this. We talked about this a while back. I'm just surprised it hasn't actually happened yet.
Yeah, it takes the IRS a long time to implement the regulations and figure out how they're going to implement the law. And that's what the holdup has been so far.
All right. Well, this is the IRS Solution Attorney. We're live in studio at 888-404-1010. We'll be back in just a minute.
Welcome back to the IRS Solution Attorney show. Pat George just has to...
take over.
Yeah.
That's Mr. Darrin Mish, and I'm your co-host, Katrina Madewell. Welcome back. So today's topic is what to do when the IRS files the returns for you.
And so we were talking about in the couple prior segments, we were talking about how the IRS will eventually file a tax return for you called a substitute for return. If, you get a 1099 and you just don't bother paying taxes. We don't know exactly what the threshold is for when they're going to do the substitute for return for you, but we think it's in the neighborhood of 10,000 or something like that. We're not really sure, something like that. What I rarely see one also. Like I rarely see somebody come in with just one. It happens, but it's not common. Usually what you see is you see them do them in bunches, 2s, 3s, 4s, 6s, where they want to go ahead and assess the tax, because it's a myth that we all have as Americans that the IRS can just go ahead and write a number down on a piece of paper and come get the money from you. But they really can't. There's procedural things they have to go through.
There's a lot of it.
Yeah, there is. And the tax has to be assessed before it can be collected. Okay, that kind of makes sense. What does the word assessment mean? Well,
you have to actually owe it.
I'm not going to give you the legal definition, but assessment basically means either you filed a return with a balance due on it, or you got audited and they assessed additional tax, or they prepared a substitute for a return. So assessment is when the money becomes owing. Due and owing is when the tax is assessed.
Basically.
Yeah, and before they can assess, they have to afford you due process. So if you file a tax return with a balance due, there's no due process. You filed the return with the balance due. You can't argue about that, right? That makes sense.
Yeah.
If you go through an audit, well, certainly you have an opportunity.
We haven't talked about that much on the show.
Yeah, if you go through an audit, you can appeal the findings of the auditor. You can do that. And ultimately, if that appeal doesn't go well, you can go to tax court, which we've pretty much never talked about on the show.
And then you can keep going from there.
And have a judge decide. Usually tax court is the end of the line.
It is?
Yeah, it's almost always the end of the line is the tax court. But then also, if the IRS prepares a substitute for return, you also have some due process rights where you can go ahead and file an original return and a real return and knock that balance way back typically.
So what are some times when you've had clients, because we don't talk about this a lot, so I imagine you don't do a lot of it, but when someone say is challenging or fighting that process of the audit and the like, what kind of things are they saying? Nope, this is wrong and you owe money for this. And then what are they challenging?
Typically the people that come in for audits to my office to talk to me are self-employed people. And, well, let me tell you this short analogy.
Have they wrote a little too much off or wrote something off they didn't like?
Here's the analogy that I use, and it's fitting since we always talk about the farm here on the show, right? Is that there's a saying, pigs get fat and hogs get slaughtered. Okay? So most small business owners engage in a little bit of pig-like behavior. The numbers are not exactly right, but there's a little fudging over here and there's a little fudging over there. I'm not advocating that. Right. I'm not condoning that. I'm just saying that's what happens.
They may guesstimate it might be a little high.
Yeah, that's what I'm saying happens in real life. And what typically happens is the people have been doing a little pig-like behavior for a while, maybe 5 years, maybe 7 years, maybe 10 years, maybe 20 years or more. And then they're like, man, I'm bulletproof. Nothing ever happens. And then they just go, they switch into hog behavior. Like they claim way too much mileage.
So they don't actually have receipts or any documentation or real miles to prove it. They just claim it. Is that what you're saying?
Quite frequently, there's either no documentation or not very much.
See, I probably would be the worst client ever because I don't do stuff like that. But I'm like, when I think I'm right, I'm right. Like I'm ready to argue to the death.
Well, no, I love representing clients who have lots of documentation in an audit because I have a chance to win. What happens a lot is people come in, they've got the audit notice. They know they don't have very good records. There's typically a flood, fire, hurricane story in there somewhere. I lost the records. And then they want me to go deal with the audit with no bullets in the gun.
Right.
And
they want you to show up to a gunfight with no bullets.
And so usually I won't take those cases unless they have a very realistic expectation of what's going to happen. It's like I can show up, I can try to mitigate the damage to the best of my ability, and we're going to just treat this as a collection case afterwards. But if they want me to go into the audit with no documentation, with no bullets in the gun, so to speak, and they want me to come out, victorious,
Fight.
no, it's not going to work. The system is set up so that you have to demonstrate, as a taxpayer, you have to demonstrate the documentation for the deductions that you took. And it's really pretty hard for most people to do that because they didn't keep very good records. So what's the moral of that story? If you're a small business owner, keep better records.
Or at least divide it up. Like if I could give one little teeny tiny piece of advice as a small business owner, at least have a totally separate bank account. That nothing out of that comes in or goes out of that bank account except for business transactions.
I was just going to say that. I was absolutely going to just say that. You should have a personal account. You should have a business account. And what I personally do is I have a debit card for each account, right?
Yep.
And they're different colors. And so if I'm standing in line at Home Depot, I have to, really at any establishment, what goes through my mind is this a business expense or a personal expense? If it's mixed.
You're going to laugh. Look, these are my debit cards.
Yeah.
Personal, business.
Yeah, hers are both green.
They're the same color, but one has big letters on it.
Yeah, she wrote on one that, some her initials so that she could tell which is which. But mine are actually different colors, and so
they used to be. I don't know why they did that to me.
It's a little bit easier for me. And literally, when I'm standing at the cash register, what goes through my mind is this business or is this personal? Am I buying copy paper at Office Depot? And am I buying my kids' school supplies too?
And here's the thing too, and this drives me nuts because I had an accountant that literally said, "Well, if you get audited, the IRS is not going to like you purchasing stuff at these big box stores." And I'm like, wait a minute, but if it's on sale, why wouldn't I buy it there?
I'll give you a great example. In my little lobby, my waiting room, we have these, the down lights, kind of like here in the studio. They're little small halogen lights. Mm-hmm. The cheapest place to get them is at Walmart. So
why would you not buy them at Walmart?
So I buy them at Walmart, but one thing I do is I make sure that receipt is segregated. I mean, there's no milk on there. There's no bread. It's just for the light bulbs.
I can't tell you how many times I go through a store and I have 2 receipts. Here's my business stuff. Here's my personal.
And then I literally write on the receipt, that those are the light bulbs for the lobby. And if you were to be audited, the IRS is going to take that. They're going to accept that. It's, and it's $16 or something, it's not a big deal. I would agree that if they just saw like a charge, slip for Walmart with, $79 or something, or Publix or, Home Depot or even Office Depot.
But if you send your stuff to Shoebox, then you got a receipt.
If you have your receipts, if you can show what you spent the money on. Another really big problem in audits is people think, well, if I use my American Express card as an example, then I have all my receipts. Well, no, you really don't. I mean, what American Express does a good job at the end of the year of categorizing your expenses, but they don't have copies of all the invoices. They're not going to have the copy of the hotel receipt that you stayed at on your business trip. It's going to say, you stayed at the Hyatt, Hilton, whatever, and here's the dollar amount. That's all they're going to have at American Express. And so, again, if you get audited, don't send me in there with that.
So they want the actual hotel receipts? Like, what if you just traveled for business? Is it not?
Well, that's a little bit of a problem area, too, is you have to demonstrate what the business purpose of the trip was, what you were doing. If it's an event like a seminar, they like the itinerary, the schedule to make sure that it was a business trip. If you stay over,
I can keep that stuff.
Yeah, it's significant.
What do you mean if you stay over? If you stay longer?
If you stay longer, so let's say you go to an event and it's on Friday, Saturday, and you stay over Sunday night. Well, you can't write off Sunday night. It's okay to be there, but you can write off the entire airfare, but you can't write off Sunday night if you were just there because you were in San Diego and you wanted to hang out on Sunday night.
I'll tell you, I go to San Diego quarterly and I cannot get a flight back the same day. I have to stay overnight without missing.
That is, in fact, a problem in traveling to the West Coast. Is it's very hard to get flights back. It's not very hard to get a flight back at 5 a.m, which is not when you want to go, but it's pretty hard in the evening.
It's usually when I go, but I cannot get a flight back the same day without leaving early.
That's
true.
True.
And then it kind of like defeats the whole purpose of going, I think.
What does?
Like if I leave early to try to catch a flight home, because I got to be back, then I've defeated the whole, because all the good stuff's at the tail end.
I hear you. I have a quarterly event that I go to out west, and it's usually a Thursday, Friday, Saturday till like noon. And I always have to leave on Saturday before it's over because I'm just not willing to give up my Sunday at home to listen to the last 2 hours of whatever.
If it's done at 5, you're not coming back that day.
No, that's true.
It's the next day.
Yeah, absolutely. That's just a time zone thing. If you left that late, you'd get here at 3 in the morning or something, and that's not.
Well, it's an all day thing. Yeah. Fly to the other coast, literally all day.
It is. It's not even a fun day either.
So it's interesting because I know, before doing the show for you, I had no idea that if you didn't file your tax returns, the IRS could and would actually file it for you. Had no idea.
And they do that because of what I said earlier. If they didn't file a return for you, there would be no tax assessed, and then they couldn't collect the money. And so
is there a certain period where you actually have to file? Like if they prepared the substitute for return, you're like, no, none of my deductions are on there. I need to file a real return to fix this.
Not really. There's the collection statute of limitations, which is 10 years. It's interesting, though, if in theory, if the IRS never got around to filing a substitute for return for you. So let me give you an example. You got 1099s in 2006. In 2006. Normally, the statute of limitations would be expired because you'd file that in 2007. It's now 2017. If it wasn't expired, it'd be pretty close, right? Well, theoretically, the IRS doesn't have a statute of limitations to prepare and assess the substitute for a return, and so you're not really safe.
So they can actually file it from 10 years ago?
That contradicts a little bit of what I said, which is you only have to file the last 6 years. But in theory, there's no statute of limitations because you never bothered to file. Now, in real life, in practical, in the real world, that doesn't happen. But it could. It wouldn't be illegal for the IRS to do that. But the fact of the matter is their record keeping is barely better than the audits that I'm talking about. And so what they do is they truncate their records after about 7 or 8 years. They just delete them.
All right, so we had some questions from listeners. We'll answer these again when we come back, but Joe wants to know what's the statute of limitations for unfiled tax returns. And we have another listener also wants to know, when will the IRS actually file your tax returns for you? I think they mean at what point. We'll answer both of those when we come back after the break. You can get us here live in studio at 888-404-1010. Again, 888-404-1010 or 1010. We'll be back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the driver of a bright red sexy tractor, IRS Solution Attorney Darrin T. Mish.
And I'm your co-host Katrina Madel.
Today we're talking about what do you do when the IRS files tax returns for you.
So let's answer people's questions.
Well, let me just wrap this up real quick by saying this, in that if the IRS has prepared returns for you and it's like 1 year or 2 years and you think you can wipe it out, you probably don't need any help. Okay, you can just get original returns filed, file them, get it wiped out. If it's more than that, you need somebody who knows what they're doing to look at this and tell you what the right move is.
And is there a certain dollar amount where it makes sense to hire you versus not?
I would say $20,000 to $25,000 and above. It makes sense. If you're into $100,000, for sure, it makes sense. It's just like
But if you owe $5,000 or something, it's probably better just to listen to the podcast.
Right. You're going to have to listen to the podcast and just kind of try and figure it out, or go to the website at getirshelp.com. Or the app.
You'll have to just create a fast track email and just sell a book.
The problem is most people don't want to know how to solve a problem, the IRS problem. They want the problem solved. Yeah. They don't really want to learn how to do it. It's scary. It's complicated. It's not that interesting, quite frankly, to most people.
It's like credit.
And they just don't want to know. They just want it done. And the problem is if the cases are really small, I can't really do them effectively because I would spend all my time just working on low cases.
You know what I say to people when they come in and their credit's a hot mess and they want to buy a house? I'd say, that credit didn't get like that overnight. It's going to take more than a night to fix it. I imagine it's the same thing with the tax problem.
Yeah, not the most sensitive way to put it, but it's true.
But I mean, it's the truth. I say it a little sweeter than that, but the truth is.
Most of our cases take somewhere between 6 and 18 months to fix. It took, in my clients' cases, a lot of times it took 5, 10, 20, 30 years to get this bad. It's going to take a little while for me to fix that. So go ahead. Let's get to the questions.
A couple questions we had, which were pretty much in line with what we're talking about, but we were a little bit all over the place, having some fun with the content today. But Joe wants to know, is there a statute of limitations for unfiled tax returns?
I kind of inadvertently answered his question at the tail end of the last segment. No, there's actually something called an assessment statute of limitations where the IRS only has 6 years. It's complicated. Okay,
they have are always maybe, whatever.
Yeah,
we're not sure.
There's a 3-year statute for assessment. There's a 6-year statute for assessment, and then there's an open assessment that's forever. So if you never file a return, then the IRS has no statute of limitations. They can file that substitute for return literally forever. Does it happen? Never seen it. Usually, as a practical matter, after 6, 7, 8 years, you're not going to see a substitute for return pop up. It's just one of those things where the IRS ends up deleting their own records. like I couldn't get the records from them if I wanted them. So
if they're not there, that's good, right?
Yeah, it's actually real good.
So the other question is, when will the IRS actually file the tax returns for you? Like, at what point will they file them for you?
I wish I knew. But I can tell you the general rule is we don't see them for 3 to 5 years
after it's done,
after it's due. So what's not going to happen? I've never seen this happen. It's where they were due on April 15th and a substitute for return gets filed in July. Never seen that happen unless there was already a whole slew of other substitute for returns and there was a revenue officer involved and he just pulled the trigger and got it done because he wanted to collect on the whole, the whole thing.
Ouchie. You're having a bad day when that happens.
Well, not usually, because you're going to come to me and we're going to figure out some better way to resolve it than pay those anyway. So a lot of times, I mean, here's a little secret. When we talk about the train wrecks of the week, typically those numbers are so high because those are substitute for returns. And so when sometimes my friends get mad at me. They're like, that person owed $200,000 and you settled it for $250. Like, that's not fair.
Well, really, his tax bill would have been something else.
Yeah, his tax bill would have been half or maybe even less. We just simply took advantage of the IRS, the way the system works, because it's somewhat easier to negotiate and settle that big number than a much smaller.
The bottom line is they don't care. They want you back in the system paying taxes, so they'd rather settle it.
That is the truth. That's for sure.
If you've got this big tax problem, like over 25,000, you can call Darrin at 888-GET-MISH.
That's 888-438-6474, or you can visit the website at getirshelp.com. We also have an app on the iTunes Store and the Android Store, Google Store. What is that? It's
Google Play.
Okay.
I think Google Music.
It's called the IRS Solution Attorney, as well as all of the radio past episodes are available on a podcast called the IRS Solution Attorney as well.
If you're looking for something specific, just Google it on there and you'll find it.
That train wreck sound was the sound to indicate to me that it's time for the IRS train wreck of the week. This is my favorite segment of the show. This is where we talk about, someone who came into the office and they just were a mess. And I think I've actually told this story before, but I want to elaborate on it a little bit more because it just got finally settled.
Was there a substitute for return involved?
There was not a substitute for return in this case. What happened is this elderly gentleman, he was lonely. He's not married. He has nobody at the house and he's lonely. And so he did what a lot of people do is he reached out on the internet for friends and companionship and that kind of thing. And he ended up being befriended by somebody who convinced him to loan him everything that was in his retirement account. So there was like $100,000+ in his 401k or IRA, I don't remember which. And he loaned this money. He quote air quotes loaned this guy this money, and he had to send it to like Abu Dhabi or the UAE, someplace in the Middle East. He had to send it there, and it was like, well, I'll pay you back, next Tuesday kind of thing. And lo and behold, the money never came back. So
I'll pay you on Friday. The check is in the mail.
And by the way, it was an early withdrawal on the retirement account as well. And so what happened is he ended up owing $43,773. And when we got involved, I believe that the tax returns were already filed. And what we did is we tried to go back and amend the returns to reflect that casualty loss, that theft loss. Because that was a theft.
Far?
Well, it was just 2 years. It was just a couple of years. And so we went back and we tried to amend those returns in accounting for the early withdrawal as a theft. And the IRS was like, negative, not going to happen. Too easy for you to fake this. And we had police reports and all kinds of things. And they didn't like it. So we filed an offer in compromise based on effective tax administration. We never talk about this. But what it is, it's an offer in compromise where we're asking for a deal based on fairness issues. He actually has a house that's free and clear, and so theoretically he could afford to pay this back, but we were arguing it's just not fair. This just is not a fair situation.
He already lost his retirement money.
And obviously somewhat gullible, and I think he would admit that too, and I'm not being negative when I say that. I mean, it was just kind of
But it is what it is at that
point.
Kind
of a knuckleheaded thing to do, but he did it, and he was the victim of this crime. And so we filed this effective tax administration offer, and at the initial level of review in the IRS, they just laughed at me. They rejected it out of hand.
And it won't be the first time or the last time you've been laughed at, right?
And I was a little bit discouraged. I'm not going to lie. I was a little bit discouraged. Ultimately, we appealed it. I found some really good case law out of the tax court, and we settled this case for $2,167. When I got to appeals, I was able to convince somebody that this was just a really unfortunate circumstance that we needed to remedy, and they agreed with me. And so,
how much did he owe originally?
He owed a little over $43,000, and we settled for a little over $2,000. So it worked out really well for him. It's a case that I'm really happy about, and I talked to him about it yesterday, and he's just thrilled beyond belief.
You should come tell a story. That'd be so fun.
And actually, he's not even in Florida. He's up north someplace, and he found me on YouTube. So we never talk about that. I have a fantastic YouTube YouTube channel, also called the IRS Solution Attorney. Over 200 videos there.
Yeah, hop on over and see us. You can get Darrin again at 888-GET-MISH. He will solve the biggest tax problem of your life. 888-GET-MISH.
888-438-6474.
Thanks for joining us for this week.
We're out.